What else is keeping you busy, Will? Is this the only venture that you are part of, or are you also investing in other ventures? I know you are an active angel investor, but maybe a little bit about yourself as well.
Yeah, so I've made, I think, about a dozen investments in the year that I've been doing this, and Dream Factories ended up being the one which I'm a lot more hands-on with. A lot of the founders I've invested in, they're already kicking so much ass that I say, okay, you guys carry on. But yeah, people ask about what's your investment thesis or what have you, and kind of I can narrow it down to being pre-seed and seed, but other than that, it's following what I am interested in and what I think is cool. So one investment I'm quite excited about is launching a product very soon called Further Finance, and they are kind of making venture capital funds accessible to retail investors. So usually you have a minimum investment level of £50,000 or more into a VC fund, and you need to know someone to get you into that. Further Finance are creating a platform to allow a VC fund to kind of list their fund, and then average person can invest from £1,000 into the fund. So VC is like the highest returning asset class of all asset classes in the last 5 years. Right. And so it makes a lot of sense for it to be able to be opened up to retail investors. So their product should be launching. I won't say the exact day just in case there are delays, but it's coming very soon.
So help me understand, for a newbie who does not know about the source of funds for a VC. So VCs are investors, but what are the sources of a VC? Where do they get their money from?
So there's usually from two different groups. It's either through high net worth individuals, people who have exited a business and have got a lot of money that they can invest into this quite high risk asset class, or it's from sophisticated investors who might be institutions like sovereign wealth funds or family offices or even the government, looking to get exposure into the kind of startup industry.
Got it. So this has been the traditional ground, but now you are opening up also to get money from individual investors as a pool that they can also contribute to the VCs, and then the VCs would put that money. And the investment vehicle is something that this startup is trying to create to make it democratized. How would this be different from an angel investment? Because angel investment, the difference is the VCs are more professionally managed, vis-a-vis angel investment, where anybody can also put in their money, right? How would you differentiate between a VC and an angel investment?
So a VC is it's a registered body and fund that needs to kind of follow the FCA, the Financial Conduct Authority's rules, because they're looking after other people's money. But when I angel invest, it's just me, and all of the risk is on myself to lose my money. But the VCs need to prove that they're responsible because they're looking after all of these other people's money.
Got it.
And with that, there is extra level. The VCs must kind of prove that they're doing their due diligence on each investment that they make, and might be a lot more selective about the kind of companies kind of proving that they're really high growth. And it's, a very competitive industry as well.
Got it. A little more about angel investing. And since you mentioned you invested in around 10 startups already, what are your guidelines when you invest into 10? I mean, when you invest, of course, you invest with a lot of trust. You do your due diligence, you look at business models, you look at the potential upside to it, but also realizing the fact that it's massively risky, right? So do you take bets on those one or two that will give you like potential 15, 20 times returns, and you are okay with losing money in the 7 to 8 of what are your guidelines?
So kind of approached it with with the attitude that if I invested all of this allocation I've made for it and I lose all of it, I'm going to be doing it for at least 3 years. If I lose all of it, then at least along the way I've met some amazing people, I've learned loads, and I've had a lot of fun. So if it all goes to zero, I'm okay with that. And that's a way of rationalizing in my mind just how terrifying putting all of this money is when the odds are stacked so severely against me. So with that in mind, I also don't want to lose all of this money, right? I want to give myself the best possible chance to succeed.
Right.
So each investment I make, I need to have a reasonable expectation that it's going to be able to return kind of at least 10x within the next 3 to 5 years. Ideally much more. And kind of 10 investments over a year sounds like a lot, and that's because it is. But the way that this is, I'm building a portfolio, and as you kind of approach a higher number, the chances of a single investment exiting and returning all of the money that you put in so far increases quite dramatically. If you imagine kind of one investment might kind of 100x your return, and that pays for 100 investments. But the chances of that one happening is very, very small. So you want to make lots of bets to kind of make sure that you increase your chance of hitting that one. Right. So the magic number is around 30, according
30,
to
30 investments.
Mm-hmm.
I see.
Yeah, that means that but as you get higher beyond that, it increases even further. So that's the idea of doing lots of small checks that might come back to something rather than a few big bets, which is a lot more of a risky approach.
You said this is a game of chances, but can you increase your chances to succeed? Like, can there be substantial difference between two investors making 30 investments, but one investor is more likely to succeed? What is the filter there?
Yeah, I think having access to the best deals, like a really good deal flow, is probably going to be the strongest way of succeeding, because ultimately it's the performance of the company that's going to determine whether or not you'll get anything back. And as savvy as you might think of yourself as an investor, like I'm very, very aware that there are a lot more factors outside of just what I can do and how I can help these companies that are going to affect the chances of it succeeding. So, being in a place that having access to really good quality companies that are raising money at the right time is probably the best place to start. Yeah.
Two questions there. How do you get access to best deals, and how do you know it's a good quality company?
That's a good question. I think trying to being really embedded in the ecosystem. So helping at Dream Factory is a fantastic way to meet founders, because all of our members are founders, right? And just trying to talk to people, and I'm very happy to kind of just offer any kind of advice or connect people I know for free, and hopefully that's kind of people recognize that and think of me well, right? And developing that kind of reputation hopefully kind of puts me in a good spot. But there's a new product coming out from a company I've invested in also, which I'm really excited for, called Landscape. And Landscape is like Glassdoor, but for venture capital. So founders can anonymously review VCs who they've pitched to, so that it kind of there's a bit of visibility into whether or not a particular VC is a good or bad actor. And yeah, the kind of overarching idea of Landscape is to make it easier for founders to raise funds. And there's a new product coming out also very soon. It's amazing, Ravi. We're having this conversation, but if it was a few weeks later, these would have just been live, which would have been perfect. But the new product's called Open Scout, and Open
Open
Scout
Scout.
basically, yeah,
Okay.
and it basically lets anybody scout a venture deal, a startup that's raising money, and VCs follow an individual scout's deal flow, and then if the VC then has a chat with the startup and invests some money, then the VC will pay the scout a success fee. So we've got three sides to this marketplace, all with a pain point that's being solved. You've got founders who are raising who need access to capital. You've got scouts who have got deal flow and want to be paid for it, and you've got VCs who want access to top quality deals and are willing to pay for it.
Got it.
So it's a really nicely balanced marketplace. And when this launches, I think it's really going to change the way that the kind of venture market, accesses its deal flow, because there's a lot of it is kind of behind closed doors and is a matter of who you know. But kind of bringing it all together on one platform, I think, is going to really, really make life easier for everybody.
Got it. So you mentioned about reputation of the angel investor. How important is that? Like there could be, if you are well known in the circles, then people would want you to be an investor in the team because it's a win-win for both, right? So you get a good deal and they get to have a good brand associated with them. Is that important to have a reputation and have a brand as an investor as well? And what does it take for for becoming that?
Yeah, I would say so. It's kind of like a self-fulfilling cycle, and you know, I I'm not so well, but it's a case of, like, you want to work with people who you like and get along with, and my I kind of look at myself saying, oh yeah, you get good deal flow if you've got a good reputation. It's not always the case. Um, but I kind of feel that my general attitude towards people is just to be nice and pay things forwards. And I hope beyond hopes that that comes back round and it works out for everybody. And I think that's also another reason why I like working in this industry, is that everybody is so open and so willing to help each other, not expecting anything in return. And it's a really nice ecosystem to be part of.
Excellent. And how do you? What's your due diligence for evaluating a good startup or a good potential?
I wish I could say that it was really thorough and going through hours and hours of grueling process, but it can really vary. I think if it depends on where I've kind of gotten in touch with this person from. If it's like a more of a colder outreach, then I'll be more thorough in the due diligence. And if it's a friend of mine, then it will be barely anything. So it can vary a lot.
Got it. So I was wondering of an idea. Like I I have never had an exit before. Okay, I'm still head of product in a startup. I don't have a lot of money to invest. But when I am actively part of, say, angel community, okay, I get deals, but I never have enough money to put into it. Is there a legal way that I reach out to my set of friends and pull in that money? And because I have access to deals, I give them those deals and pull that money on their behalf
Mhm.
and make a cut. Is that a business model that is prevalent, or how is it?
Yeah. There's two companies that are doing that let you do that kind of thing. There's Valban and Odin. I know Valban a bit better. They're a really good company. They basically let you spin up, create a kind of, it's called an SPV. It's a special purpose vehicle, and this lets you create a mini syndicate to invest in a single company. So you could go to all of your friends and say, hey, look, if you invest £1,000 or £3,000 or whatever, you can hopefully pool enough to make it economically work out that you can then invest, because a startup probably wouldn't want you on your cap table, on their cap table, if you're only putting a small check like that in, because it kind of it can crowd things, and there's a lot of admin associated with that. But if you pull together all of your friends, then it sits on the cap table under one row.
Got it.
Yeah.
And then is there, if there is an upside, do, because I'm pooling in, do I get an admin benefit for that? Like the admin?
I think you can have some where if there is an exit, you take a percentage of the exit.
Got it.
Yeah, think
And
I think that's how it works.
what were the names did you say for that SPV?
Valban,
How do you spell it?
Vauban,
Okay, Wowban
and Odin, like the Norse god.
sorry, how do you spell that word in?
Odin.
ODIN. Okay, ODIN. I see. Got it. Excellent. Cool. Um, and then there is this downturn and voices of recession that is now clouded the entire ecosystem, right? How do you how do you see that as an investor? Do you see hard times in, or do you see that there are some businesses which will still thrive irrespective of market conditions? How do you see the opportunities for also investing into new startups, and also for the startups, also for the investors, both sides?
Yeah, it's really interesting. I think it is. Hard times are definitely approaching, and this comes at the end of the longest bull run in the history of the market, right?
Right.
So I think it was an inevitability, but no one likes to see it arriving.
Right.
And at the end of this bull run, we've seen crazy high valuations. We've seen more and more capital being invested into startups, but I don't think that there's been a great deal of sanity around that. And so I think a lot of the companies who have received kind of some of that money, those are the ones that are going to struggle the most, because they haven't really figured out a route to profitability soon. So when they come to do their next raise to try and survive, that's going to be really, really hard for them. But the businesses that will do the best are the ones that have been keeping an eye on cash flow and are trying to build a profitable business model. And that the idea of making something profitable in startup world has almost been a dirty term, because that
Yes.
implies that you're not growing fast enough from
Right.
the investment point of view. And I just think that is a really short-sighted way of approaching growth, because you you want to have a business here, you want to have sustainable growth, and if you are able to exist without external money, then that puts all of the power into your hands, right? You can decide whether you want to raise money or not, and
Right.
that's just the right way of doing it. So I think we're going to see, from where I'm sat, I think there will be fewer people starting businesses and starting ideas now, because they might prefer the security of an actual job, knowing that it's going to be harder to secure, say, their seed or their Series A funding. And I think the people who are doing it will probably do it at a lower valuation, because they know that the capital is harder to come by. So it's going to be interesting. And my portfolio companies, I think, on the whole, are taking the attitude of being cash flow positive, which is great. But yeah, it's going to be interesting.
So, so,
Borderline terrifying.
so does being cash flow positive come at a cost of growth? Because usually it's the growth, it's hyper scaling that burns most money. Okay, I could still be sustainable within my local market.
Mhm.
Okay, and I become cash flow positive, but if I don't grow, there is also a chance that I might fail, because competitors could come up. Somebody will copy my business model with more money, more capital access. They will be, and I'm gone within the next 2 years. So usually scale is always a way to survive, right? So you pull in a lot of money and you scale and you push your profitability for the next 5 years away because you just want to scale and capture as much as market share. So are
Mm.
you saying that is going to be a thing of the past with this new in this new environment?
I think it will be much more difficult to pull off. No doubt, some businesses will be doing that, and it might be the right decision for them. But generally, when I speak with the people I've invested in, is going down the venture route the right one for you? Is the question, because it's often assumed that we need VC money, and that is just the way to do it. But I don't think that that's necessarily the right thing for the business or for the founder, because it's a different relationship you have. When you've got a board and there's a VC and the VC wants VC returns, they're probably willing to put a lot more risk into the business than the founder might want to, right? Because it's the founder's livelihood, and I'm all for putting the founder ahead of anything else, because it's this business is them, and I'd much sooner help them have a good and happy life than me get my 10x in 3 years or whatever it is. That doesn't really mean as much to me as seeing someone succeed.
Got it. So at least, so your advice to early startup founders would be to stay cash flow positive, bootstrap, maybe contain yourself with whatever markets you are, sustain the business and stay alive, see through this phase, and then once better environment comes in, start trying to expand.
Yeah, absolutely. And if you're in the position where you don't need to go out begging for money for your business to survive,
That's the
then that
best.
means that you can go out, taking the right money for you. It's smart money, and that means that you might be on a slower overall growth trajectory,
Got it.
but you can still grow when you're ready to grow.
Excellent. So you seem quite wise when it comes to investment, and so what is your
It's
how do you
generous.
how do you keep yourself sharp? Like how do you keep in the know? Like is it a lot of conversations that you have in day to day life with a lot of founders and understanding the businesses, understanding the industries? Is that where it comes from, or what's your source of knowledge and experience?
uh, I'm grateful you even think there is one. I think it's just being interested in it and talking to people who are also interested in it and have got skin in the game. That's the best way to learn. I'm keen to absorb any kind of knowledge or information from wherever I can, and especially when it's this is now my full-time thing that I'm putting my life into. So kind of makes sense from that perspective, just to try and develop an understanding of what's going on, which is not always easy, and especially in a very tumultuous time like this, it's even more important to understand, well, something's just changed here. What does that mean? How should we act in this new kind of era?
Yeah. So what does this mean is the most profound. I mean, every I think the positives or the upsides are bad teachers is how I see it. It's only the downturns that teach you a lot, because otherwise you take things for granted, right? Because as you said, it is the longest um, bull run that we have had, and people just take things for granted. And now people have a sort of perspective to say, okay, let's look at. I mean, I was just looking at YC videos. Even the VCs are now talking about being reasonable in your cash flow and trying to contain and not burn money and not expand. So it seems it has shifted perspective in a lot of ways. But hey, thanks, Will, for sharing all your wealth of wisdom with us. And I cannot thank you enough for your time and sharing all of that on a Sunday morning for us.
Oh, it's been an absolute pleasure, Ravi. I've really enjoyed the conversation, and thanks for your insightful questions. Yeah,
Thank you, Will. See you around. Bye bye.
take care. Bye bye.